can the dollar yen hold above key support going into FOMC and also the last trading day of the month? That's what we're talking about in today's video. We'll also take a look at the DXY, the US dollar index, and also the yen index. All right, so first and foremost, a little housekeeping. If you are on YouTube, guys, if you're watching this on YouTube, as I mentioned yesterday, these videos after this week will only be available on the website. So see the link at the top of this video if you're on YouTube or in the description to head over to the Daily Price Action website, sign up for the videos there. All you need is your email address. It's a one-time thing. Put your email address in. You'll get notifications every day for new videos and also be able to watch the videos that are currently there. Okay, so looking here, guys, at the dollar yen. Let's talk some key levels first, and then we'll run through some possible scenarios. We're also going to look at the DXY and also the yen index. So first and foremost, if you guys have seen recent videos, this is what we were looking at back here with this weekly close. So this red candle right here was a weekly close. The market held above 144.80. So this was our key level. And you can see where we did get that move up here toward 146.50, also 148.35. Now, this has been resistance, okay, for the past couple of weeks. And the one thing that I really like about the dollar yen is how clean these levels are on the daily chart. Okay, so as you guys know, I do like to use the daily time frame, hence the daily price action name. So looking here, right, we've got a range bound market between 146.50 and 148.35. Now, obviously, we know that we're heading into a lot of volatility today with FOMC and also the last trading day of the month. So if you guys don't know, the last trading day of the month does tend to produce a lot of volatility in the markets because you get a lot of administrative driven moves. And what I mean by that is instead of it being conviction based, you get a lot of moves where institutions are closing out their books. And so you could see something like this, something very erratic down here, then back above, things like that, or even up here and then back down. And just because institutions are closing out their books, but it doesn't mean that the moves that you're seeing on the last trading day of the month are always conviction driven. Okay, so keep that in mind as we head into today's events. Now, here's what's going to be key for the dollar yen. If we see it start to close below this area around 146.50, okay, if it closes below this, down here into the monthly close, then this up here becomes resistance, and we're looking at a run, potentially back here toward 144.80 and maybe even 142. Okay, now this is also going to hinge on the yen index as well as the DXY, of course. So let's take a look here at the DXY, which is so far selling off today. Now, this is what I talked about in yesterday's video. If you guys missed that video, be sure to go back and watch it because I do talk about the potential for a pullback while below 103.50. So this is what we've talked about now for the past couple of weeks, looking here at the 12-month time frame. So every candle is 1 year, going all the way back here toward 2016. You can see where this level has been a critical factor for the DXY. So the idea of a break above this without some type of pullback, especially into FOMC, is unlikely, in my opinion, and that's exactly what we're seeing here so far today. Now, markets seem to be getting ahead of themselves here, considering that we're hours away from FOMC, with the DXY already down 0.4%. Okay, but really, ultimately 103.10 into the daily close is going to be a key level to watch, but 102.60 is the one to really watch here for the dollar. And again, this is going to affect the dollar yen, so it's worth paying attention to because this key level back here, if lost on the daily and monthly charts, because remember, the monthly close is coming up here, if we see the DXY trading down here on a daily closing basis, then it means this entire move up here is a fake out, and we're likely to see a move back toward 101.90 and potentially 100.8. Okay, so keep that in mind as we head into today's FOMC. But ultimately, guys, when you're looking at the dollar yen, regardless of what market you're looking at, expect a lot of liquidity sweeps. Okay, so right now you can see where we're getting a little bounce here from our key support. So no surprise there. However, with FOMC, even if we see the dollar yen trading up here into FOMC, holding above that key level, expect a sweep of the low before a further bounce. Same thing with the highs up here. Expect a sweep up here before we get a sell-off, right? This is a case where going into FOMC, you identify your range and then you look to trade the extremes, right? You look to trade down here, you look to trade up here because you know that the powers that be are going to want to sweep the lows down here into that sell side liquidity. Same thing with the buy side liquidity up here above these highs. All right, so be very careful of the initial moves that you see with today's FOMC. Because with events like this, typically the first move is quote unquote wrong. Okay, the powers that be are running the liquidity in the market either below the lows or above the highs. So you do have to be careful. And that's why too, reacting to the price rather than trying to predict what will happen is always the best policy. Now, let's take a look at the yen index, guys, because this is going to be a critical factor for the dollar yen. And this is what we discussed at the end of 2023, where going all the way back toward 2021, you can see where we have this descending trend line off of several highs. And the key here for the yen index was to either break above this, okay, give us a sustained break above this, and specifically this pivot through here, right, to either give us a breakout for the yen, or we get the close back below this key area. Now, you can see which way this went. And so for the yen index, which moves inversely to the dollar yen, what's going to be key for the yen index, if we're going to see a further pullback for the dollar yen, is going to be this area up here. Okay, this entire region that was lost recently, the yen index would have to close back up here in this area. Now, it still has that trend line to deal with, right? But if it were to reclaim this area up here, then we are likely to see a more significant pullback for the dollar yen. But as of right now, this is going to be resistance. So if we know that that's resistance for the yen index, and we know that this moves inversely to the dollar yen, if we flip back here toward the dollar yen, then there is that chance that we see a pullback even down here toward this area before we get a further bounce. Okay, so keep that in mind as well, that when you're looking at the yen index, even though the market is very sideways here, all right, if we do see a retest of this resistance area for the yen index, then that could mean a further pullback for the dollar yen. But ultimately, though, if you're trading this on a level-by-level basis, which you should always be doing, then the dollar yen, right, going into FOMC, it's at support now, 146.50, but where the market closes the day and the month is going to be critical. If it closes down here, then this flips to resistance, and we're looking at a run back here toward 144.80. If it closes below that, then we're looking at a run down here toward this low, potentially all the way back toward 142, but you've got to keep an eye on the yen index that we just looked at. And alternatively, resistance is up here at 148.35. All right, so really, level by level market right now for the dollar yen for all of these markets. But keep in mind, though, with FOMC coming up, expect a lot of volatility and also expect liquidity sweeps. But what this is going to come down to is where today closes and where the monthly closes. Bottom line, though, expect a lot of volatility, expect a lot of erratic price action. So just be careful out there. And again, it's not financial advice, but just my opinion, react to these markets, okay, where the day closes, react to them instead of trying to predict what you think will happen. It will do wonders for your risk management. It will also do wonders for keeping you in the game so that you can succeed. All right, that's it for today's video, guys. Thanks for joining. Be sure to claim your 70% off VIP access. Trade well out there. Be careful with FOMC today, and I will talk to you again tomorrow.